Hello, good morning. April 14, 2020, Tuesday, 4:25 a.m. So, ngayon, mag-start na tayo discussion natin sa financial management. Kung mapapansin nyo, nag-skip tayo sa quantitative technique and bringing down ko yung relevant costing and differential analysis video kasi yan yung topics namin for my management accounting part 2 class with the 5th year BSAC lead. So, dito muna tayo sa financial management. Kung saan mag-start tayo sa financial statement and ratio analysis. So, basically, sa financial management topic, ito yung pinaka-easy, lalo na sa board exam. Bakit? Ang gagawin nyo lang man dito is i-memorize yung mga formula and sa board exam, tamang pagkakaalala ko, ratio analysis or mga ratio questions ang bubungad. Ito yung mga unang questions sa exam. So, start na tayo. Now, financial statement analysis. Ano ang importance ng stockholders report? Well, ang stockholders report, it summarizes and documents the firm's financial activities during the past year. It begins with a letter to the stockholders from the firm's president and or chairman. Now, ano ba yung letter na yun? Well, itong letter to stockholders, ito na yung primary communication from management. It describes the events that are considered to have had the greatest effect on the firm during the year. It also typically discusses management philosophy, corporate governance issues, strategies and actions, as well as plans for the coming year. So, ano ba itong labot? Ano ba itong importance ng stockholders report? Well, as you know, stockholders are the, or technically, as you know, stockholders are the owners of the company. Now, being the owners of the company, they have the right to know what is happening in the operations of the company. So, kaya nandyan yung stockholders report, and yung nababalitaan yung nababasa yung mga stockholders meeting, yun. Kaya mahalaga yung stockholders report kasi kailangan yung mga may-ari ng company, informed sila, alam nila kung ano yung nangyayari sa company nila, kung kamusta yung investment nila. Now, in connection with that, nakikita ng mga stockholders yung financial statement. Now, ano ba itong financial statement? Ito ba yung mga structured representation of the financial position of and the transactions undertaken by an enterprise. So, itong financial statement, usually, ito yung data saan naka-record yung operations o yung mga pinagagawa ng company. Sa financial statement yun nakalagay. Now, ano ba ang objective ng financial statement? Well, accordingly, it is to provide information on the financial position, performance, and cash flows, as well as their changes to a wide range of users in making economic decisions. Now, as you know, yung mga users na yan, when they make decisions or economic decisions, dapat inform sila. And because dapat inform sila, yung financial statement na yan, yung data from the financial statement, help the users in making economic decisions. Kasi, mas nagiging informed sila bago sila magawa ng decision. Kasi yung financial statement, data yan siya. Data representing what is happening in that or what has happened and what would probably happen in the company. Now, the fourth key financial statement. So, ito, alam na natin ito. Accounting 201, siguro na sa atin ito. First is yung income statement or statement of comprehensive income. It provides a financial summary of the firm's operating results during a specified period. So, about the operations. Now, ang balance sheet or the statement of financial position, ang sa kanya naman daw, it presents a summary statement of the firm's financial position at a given time. The statement balances the firm's assets, what it owns, yun daw yung asset, against its financing, which can either be debt, what it owns, or equity, what was provided by the owner. So, yung debt and equity, basically, yun yung capital structure ng company. And then, alam natin, asset is equal to liability plus equity. Yan is balance sheet. Mas the statement of stockholders' equity naman daw, sa kanya, it shows all equity account transactions that occurred during a given year. And lastly, the statement of cash flows, a summary of the cash flows over the period of concern, cash inflows, o yung net ng cash inflows and cash outflows. Yan si statement of cash flows. Now, si anak ulan, si notes to financial statements. Sa kanya naman daw, provides detailed information on the accounting policies, procedures, calculations, and transactions underlying entities in the financial statements. Now, kasi kung makikita natin sa mga FX ng mga company, itong silang apat, parang single account or simple lang yung pagkakagawa sa kanila, like mga ilang pages lang yan. Now, ang ipapataba talaga sa isang financial statement is yung notes. Kasi dyan sa notes na yan, dyan na ini-explain lahat. Dyan na ini-explain lahat yung meaning o yung ano yung laman ng mga account or an amount dito sa apat na to. And, lalo na pagkagawa kayo niyan, like yung feasibility studies namin, yung sa mga OJT sa mga audit firms, yan, makikita nyo na, ang nagpapataba talaga sa financial statements is yung notes, kasi yan yung summation ng amount and accounts dito sa apat na to. Now, ngayon alam natin yung financial statements na yan, ang kailangan natin gawin dyan is to analyze. Now, ano ba itong financial statements analysis? Well, it is the process now of extracting information from financial statements to better understand the company's current and future performance and financial condition. So, yung pinapertain nito, ang meaning nito is, nandyan ng data. Ngayon, ano ang gagawin mo? Ano ang gagawin mo sa data na nakapresent sa'yo? Siyempre, will give meaning to the data. Gagalawin mo yan para tingnan kung ano pa yung mga information na pwede mong makuha from that data. And from that data or from that information na nakuha mo from that data, mas makakagawa ka ng informed economic decision. Kaya mahalaga yung financial statement analysis. Kasi mas may makukuha ka pang information. Mas may intindihan mo pa yung operation ng company. Mas may intindihan mo pa kung ano yung state ng company. Now, this financial statement analysis involves or ang tawag dito ratio comparison, cross-sectional analysis, and time series, pati combined analysis. Now, dito kay cross-sectional analysis, it involves the comparison of different firms' financial ratios at the same point in time. Basically, tingnan mo yung FS ng Jollibee at FS ng Macro, i-compare mo, sino yung mas profitable sa kanila, yun yung cross-sectional analysis. Papakita mo kung same industry sila. So, makita mo na, uy, mas marami itong sales si Jollibee, uy, mas marami itong inventory si Macro. So, doon mo makakompare yung financial ratio o financial data ng mga firm. So, basically, ito sa cross-sectional analysis, mas possible dapat companies within the same industry. Kasi yun yung mas proper comparison. Na kung gagawin mo, i-compare mo yung financial ratios ng companies ng different industries, na makikita mo lang is yung differences nila. Kasi iba yung operations na pinagagawa nila. Next is yung time series analysis. Itong time series analysis is evaluating performance over time. So basically, ang titingnan dito yung growth ng company o yung mga changes na nangyari sa ratio over time. From the past year to the present year or from the past 10 years, ano yung mga changes na nangyari sa financial statement and financial ratios ng company. And lastly, comparative combined analysis. So, bakit? Kasi mas magkakaroon ka ng proper view, proper point of view, or proper perspective about the financial data of the company kapag both cross-sectional and time series ang ginamit mo. And kapag mas maganda yung point of view mo o yung perspective mo, mas maganda yung information na makukuha mo, which in turn, mas magiging maayos or informed yung economic decision na gagawin mo. Now, ano bang objective ng financial statement analysis? To identify an organization's financial strengths and weaknesses. So, basically, ang meaning nito is para mas makilala mo yung organization, para mas malaman mo ang strength niya at yung weaknesses niya. Which basically means, for a user, kung gaano ka-risky, kung gaano kagaling ang isang company sa operations na to. Yun yung objective talaga ng financial statement analysis. To give the user proper information for his or her economic decision making. So, syempre, may mga kailangan kang limitations or cautions take into account when doing an FS analysis. Para lang para hindi ka magkamali kapag gagawin mo nito. First, deviation sa only indicators the possibility that there is a problem, additional analysis needed. So, dito, pag may nakita ka, parang may mali. Parang ba yung lumabas compared to the industry standard. So, yung mga deviations na yun, yung mga outliers na yan, o yung mga mini problems na nakita mo, it only indicates the possibility na may problema. Hindi mo pwede agad sabihin na, may problema dito. Hindi mo pwede gawin yun. Pwede mo lang indicate or para bigyan ka ng idea na baka may problema. And kapag nakita mo na baka may problema, additional analysis needed para mas maging sure ka. Huwag ka diretso agad na mag-decide from that situation. Dapat mas informed ka. Dapat mas alam mo. Now, second is inherent limitations on the data used for the analysis. So, basically, yung mga data na yung ginamit natin sa pag-complete ng ratio for the analysis, hindi yan sila perfect. May mga limitations rin sila. First is variation and lack of consistency with the application of accounting policies and principles, policies, and procedures. No. Itong paano company, iba yung accounting policies na implement niya last year, tapos bigla siya nagpalit for the current year. Now, because of this lack of consistency, yan sa data na yun, yung data na gagamitin for the analysis, magkakaroon niya ng mga deviations or mga changes na kung saan hindi consistent, hindi naaayon, it will not show the proper picture. Pag nagkaroon ng lack of consistency because of changing what kind of accounting principles, policies, and procedures ang implement ng company. Second is to condense presentation of data. Lalo na ito, masyadong malaki, masyadong marami, masyadong voluminous yung data. And lalo na sa mga big companies, sa mga large companies, sa mga conglomerates, yan, malaki, madami ang data. Medyo mahirap maggawa ng analysis yan. Kasi alam natin na yung mga financial ratios na yan, it only indicates specific aspects of the financial statement. Mahirap gumawa ng informed decision making because napaka-content, napaka-voluminous, napaka-marami ng data. Third is failure to reflect change in purchasing power. So, dahil nasabi ko, yung mga financial statements na yan, o financial ratios, will only pertain to specific aspects of the company. So, mahirap talagang i-reflect yung overall performance. Now, dito naman tayo sa third, seasonality may affect the computation, different points in time computation. Well, gano'n ang alam natin, pag Christmas season, mas mataas yung sale ng hamon or ham. Na yung mga company na nagpo-produce ng hamon na yun, during the Christmas season, tataas yung sales nila. Na, from that, makikita natin na there's a lack of consistency with the operations of the company. Kasi mayroong deviation yung nangyayari during the Christmas season, tumataas yung sale. Same thing with companies that produces ice cream or halo-halo. Na during summer, tumataas yung sales nila. So, yung mga deviations na yan, was caused by the seasonality. And because of the seasonality, there's lack of consistency with the data. So, the financial data being compared should have been developed in the same way. So, same lang yan sila, dalawa. Kasi, pag hindi it was not developed in the same way, there's lack of consistency with the data. And kung there's a lack of consistency with the data, expect na there will be unexplainable or hindi naman unexplainable, but pwede mo rin sa explain, there will be deviations that will pop out from your analysis. And fifth is it does not show overall performance, only specific aspects of the financial statement. So gaya ng sabi ko kanina, when na-mention ko to dito, because it only shows on specific aspects, you cannot make an informed decision making out of that. Kasi mga specific parts lang ng financial statement ang naging deep ang pinanalagay mo. Kailangan mong gawin itong lahat. It only helps with your decision making, but you cannot base your decision making on those specific aspects. Ulitin ko, it will only help you or it will aid you in your decision making, but you cannot base your entire decision making with those specific aspects because it does not show the overall performance. 6 is inflation would severely affect the data by distorting values. So, because alam natin sa inflation, nagmamahal ang mga bagay. Bakit? Kasi, o tumataas yung presyo ng mga bagay kasi yung value ng mga bagay is bumababa. Kaya, yung amount na kailangan o yung purchasing power or the amount na kailangan natin bayaran is to purchase that stuff or things lumalaki. And because of that, it distorts the value, the true value of the assets or liabilities, lalo na sa mga lugar na kung saan there's a hyperinflation, na kung saan halos everyday or kung saan everyday tumataas yung inflation rate, mas bumababa yung value ng currency, mas nag-distort yung value ng mga assets ng company or its liabilities. So, because of that inflation, nagkakaroon ng variation or lack of consistency with the data. Because with that inflation, it will not show you or prevents you from seeing the true value of the data pertained in the financial statement. And lastly, preferably use audited financial statements. Yung meaning yan. Kasi kapag gagawa ka ng financial statement analysis, gamitin mo yung audited one. Huwag mong gamitin yung hindi pa na-audit. Kasi yung sa mga hindi pa na-audit, well, hindi yan trustworthy. Kasi companies mismo yung gumawa na, what if nagpakulong yung company just to make their financial statements beautiful? Yeah. It will distort the value. It will not show you the true information about the company. Eh kapag audited yung financial statements, at least assured ka, reasonably assured ka, na yung data na ginagamit mo for your analysis is proper, is tama. So, kapag mag-financial statement analysis ka, may mga steps ka na kailangan i-take. First is that, you need to establish objectives of the analysis. Isipin mo, or alamin mo, ano ba ang reason bakit may ginagawa? Binayaran ka ba para gawin yan? Or inutusan ka ba ng supervisor mo na maggumawa ng financial analysis para sa decision making ng mga interested users? So, establish the objective. Alamin mo kung bakit mo yan ginagawa. Second is, study the industry in which the firm operates and relate industry climate to current and projected economic development. And itong third, develop knowledge of the firm and quality of management. So itong 2 and 3, basically, ang minimum lang is, alamin mo kung ano yung pinagagawa o yung operations ng firm na gagawan mo ng financial statement analysis and all the factors related to the operation ng firm na yan o that company. Kilalanin mo, kumbaga. Now, sa fourth step is evaluate financial statements using any of the techniques below. Una is horizontal or trend analysis, vertical, and financial review. So, malalaman natin ito mamaya. And lastly, kapag ginawa mo na ito sila, i-summarize mo na yung findings mo based on analysis and reach conclusions about firms relevant to the established objectives. So, ibabangga mo na yung findings mo sa objectives na ginawa mo. Tingnan mo, proper ba ito? Maayos ng operations nito? Risky ba itong company na ito? Efficient ba sila sa operations nila? So, yan yung gagawin mo sa fifth step. Titingnan mo na kung ibabangga mo na yung results mo sa ginawa mong objectives. Now, pumunta na tayo kay horizontal analysis. Now, ano ba itong horizontal analysis? Well, horizontal analysis ng plan is the percentage analysis of changes in comparative financial statements. So, ano meaning ng yung, for example, yung financial statements mo for 2010, pwede mo siyang i-compare or to-compare mo siya sa financial statements for 2011. So, medyo sinisinok ako. Now, yung steps na iti-take is compute the peso amount of the change from the base year, base period, or earlier period, kaya nasabi ko, 2010, to the later period, which is 2011. And after mo yung gawin, divide the peso amount of change by the base period amount. This, however, is not done if the base year period figure is negative or zero. Now, paano natin yung gagawin? Well, kita natin dito sa example. For example, sales 1. The current period sale is 2,500,000. Pero yung and the base year or the previous year was 2 million. So, kung makikita natin, there's an increase of 500,000. And with that increase of the 500,000, makikita natin na i-compute natin by dividing the increase or decrease by the previous year. So, 500 divided by 2 million is 25%, which is an increase. Now, dito naman sa sales 2, let's say yung current period sales is 1,250,000. Sa base year, yung previous year, yung sale is 1,667,000. Nagkaroon ng decrease. Well, sorry na kailangan may open to, parenthesis. So, nagkaroon ng decrease ng 470,000. So, ang gagawin natin, 470 divided by negative 470 divided by 1,667,000. Ang lalabas yan is approximately 25 or negative 25%. So, makikita natin, yung horizontal analysis, it basically compares the financial statements of two separate accounting periods, which is the base year and the current period. Well, pwede rin na magkaroon ng base year, tapos the year after the base year, the year after the base year, then the current period, basta hanggang si base year para magkaroon ka ng comparison. Now, si vertical analysis naman. Punta naman tayo kay vertical analysis. Accordingly, itong si vertical analysis daw is the percentage analysis used to show the relationship of each component to the base total within a single statement. So, anong pinipertain ng vertical analysis na to? Well, it is useful in common size financial statements. Kung saan, itong mga common size financial statements lang are statements which amount were translated from peso amounts to percentage, indicating the relative size of an item in proportion to the whole. Thus, this common size balance sheet shows assets, liabilities, and equity as a percentage of total assets, while common size income statement expresses revenue and expenses as a percentage of sales. So, paano natin ito mas makikita o mas maintindihan? Ito siya, class. Ito yung vertical analysis. Now, in conversion procedure daw is, for the balance sheet, each item there is converted to percentage by dividing it by the total asset, and for income statement daw, para malaman natin or para ma-present natin, each item is restated as a percentage of net sales by dividing the former by the latter. So, makikita natin, dahil sa dito, percentage analysis used to show the relationship of each component to the base total within a single statement. So, as you can see here, ito yung base total, si total assets. Now, kung i-compare natin si total assets, dahil sa mga kung anong nilalaman nito, which is cash, AR, inventory, related expenses, and ito, mga peso amount ko dati na kung saan kinonvert natin into percentage amount. Bakit? Para mas maintindihan mo yung component ng base total. Like for example, kita natin dito, ang cash is 11, AR and inventory is 33, rate is 10, equity is 13. Now, kung makikita natin dito, malaki yung AR and inventory. So, from that information, masasabi natin na itong company na to is a merchandising company. Bakit? Kasi kung makita natin dito, malaking component ng total assets nito is for accounts receivable and inventory, which is normal for a merchandising company. So then, makikita natin na from that information alone, nagkaroon tayo ng understanding about sa operation or about sa data ng isang company. Dito makita natin na merchandising. Parang merchandising yung company na to kasi yung ER niya, pati yung inventory niya, forms a large part of the total asset. So, nakikita niyo na bakit mahalaga ang financial statement analysis kasi it gives you an idea or a bigger idea or more information, kumbaga, about the company. Now, natapos na tayo sa vertical, natapos tayo sa horizontal, pumunta naman tayo sa financial ratio analysis. Now, ano ng financial ratio analysis? Well, ang financial ratio class is a comparison in fraction, proportion, decimal, or percentage form of two significant figures taken from financial statements. So, let's look, may mga figures sa financial statement. Kukumpit mo sila gamit ang given formula. And with that, magagawa ka na ng comparison. Now, with this comparison, it expresses the direct relationship two or more quantities in the statement of financial position or statement of information. So, minimum lang yan. Because of that comparison, mas nagkakaroon ka ng idea ng mga value or amount or data in the financial statements. And this method or this financial ratio analysis involves methods of calculating and interpreting financial ratios to analyze and monitor the performance. So, kung makikita natin, ang minimum ng tatlong bullet point the financial statements has data or value. Ang given data, pagdalaruan din ng mga data yan. Kung compute yan, gamit ang mga given formula. And from that given formula or from that results, after mo compute yan, that given formula, magkakaroon ka ng assessments, magkakaroon ka ng comparison. Tingnan mo rin yung data o yung results ng compute mo. At dito, magkakaroon ka ng assessments. From that assessment, mas magkakaroon ka ng proper understanding sa operations ng company. In that proper understanding sa operations ng company, mas magiging informed ka sa decision making na gagawin mo. Now, ano ba ang mga categories or the categories of financial ratio? Well, first, liquidity, activity, debt, profitability, and market conditions. So, let's go to liquidity ratio. Now, liquidity ratio. Anong liquidity? Ang sabi dito, the liquidity of a firm is measured by its ability to satisfy its short-term obligations as they come due. Ang liquidity daw refers to the solvency of the firm's overall financial position, the ease with which it can pay its bills. So basically, ang pinapertain or ang minimin lang ng liquidity class is yung capability ng firm to satisfy its obligation. Yung capability ng firm para mabayaran yung mga utang nito, especially if yung mga utang nito is short-term obligations na will come due, na darating na. Yung capability ng firm na mabayaran yung mga utang nito. Yun yung liquidity. Tandaan nyo yan. Now, bakit ito importante? Bakit importanteng malaman yung liquidity ratio ng firm? Well, nakalagay dito. A common precursor to financial distress and bankruptcy is low or declining liquidity. These ratios can be provided or can provide early signs of cash flow problems and impending business failure. So, pag nakita mong pangit yung liquidity or mababa yung liquidity ratio ng isang company, masisense mo na or ma-assess mo na uy, may problema ito or wala itong capability to pay its obligation. Kapag nakita mo nang mababa yung liquidity ratio ng isang company, kabahan ka na. or magduda ka na. Ibig sabihin, wala itong pambayad sa mga utang nito. Kaya ang mga creditor, usually, hindi nila nila ang liquidity ratio ng isang company. Kasi from there, ma-assess nila na may capability yung company na bayaran yung mga utang nito. So, mahalaga ang liquidity ratio. Now, ano yung mga basic measures of liquidity? Ito sina current ratio at sina quick ratio. Now, ano ba si current ratio? Si current ratio daw class is one of the most common cited financial ratios because it measures the firm's ability to meet its short-term obligations. Pinapakita lang yung current ratio na yung capability, paulit-ulit ko itong sinasabi, yung capability ng isang company para mabayaran yung mga short-term obligations ito. Kaya nga nakalagay dito, current ratio. Current ratio. Now, anong formula ni current ratio? Current assets divided by current liabilities. Kaya nga, current ratio, short-term obligations. So, current ratio is equal to current assets divided by current liabilities. Now, take note, higher current ratio indicates great degree of liquidity. Bakit? Kung makikita natin dito, kung mas mataas si current assets over kay current liabilities, ibig sabihin, mako-cover ng company lahat ng short-term obligations ito. Mababayaran ni company lahat ng short-term obligations ito kapag mas malaki si current assets over kay current liabilities. Ang sagot dito is 1.0 or and above. Kapag ano nangyari, ibig sabihin, mas maraming current assets compared sa current liabilities. Meaning, mas may ako-cover ng current assets yung pambayad sa current liabilities. Now, kapag below 1 ang answer dito, kapag below 1 ang current ratio, ibig sabihin, mas maraming liabilities, mas maraming current liabilities over sa current assets. Meaning, hindi mako-cover ng current assets lahat ng current liabilities, which means na walang capability ang firm to meet its short-term obligations. Kaya nakalagay dito, the higher the current ratio indicates great degree or greater degree of liquidity. So, ang favorable na current ratio is 1 and above. Now, quick or asset-based ratio is similar to current ratio except that it excludes inventory because sa lahat ng current assets, yung inventory ang is liquid. Kasi may mga certain times na hindi mo mabibenta agad ang inventory. So kapag hindi mo mabibenta agad ang inventory, wala kang cash na pambayad sa short-term obligations. Kaya kay quick asset-based ratio, tinanggal niya si or in-exclude niya si inventory kasi sa lahat ng current assets, ito yung is liquid. So, ang formula ni quick ratio is current assets minus inventory divided by current liability. So, nakalagay na nun dito, the quick ratio provides a better measure of overall liquidity only when a firm's inventory cannot be easily converted into cash. So, si current ratio as compared kay quick asset-based ratio, kay quick asset, kaya nasabi dito, mabilisan. Kapag kailangan agad, ora-orada, mabayaran sa short-term obligations, yung quick ratio ang tinitingnan, lalo na kapag yung inventory is hindi mabenta agad. Kaya na-consider siya as least liquid. So, yan. Kumbaga, ang difference lang ni current pati ni quick, si quick ratio, gaya na sabi dito, kapag kailangan mo ng mabilisang liquidity, si quick ratio ang tinitingnan. Now, additional lang, working capital or the current assets represents that portion of investments that circulates from one form to another in ordinary course of business. So, ito yung mga ginagamit mo sa operations ng company mo in the ordinary course of business. So, nadaanan nyo na to nung undergrad. So, additional info na lang to. Now, net working capital is the difference between the firm's current assets and its current liabilities. Now, ang formula niya is net working capital is, gaya ng sabi dito, the difference of current assets and current liabilities. Now, anong labot o anong halaga nitong net working capital? O tinitingnan lang nito kung ano yung excess ng current assets over kay current liabilities. Kapag may excess yung current assets over kay current liabilities, ibig sabihin, na-cover mo lahat ng current liabilities mo. May extra ka pang natira para gamitin sa operations mo. I repeat, pinapakita lang nito na kapag may mas malaki or positive yung answer kay net working capital, ibig sabihin, yung current assets mo, na-cover niya lahat ng kailangang bayaran sa current liabilities. May extra ka pa na pwedeng gamitin o invest para gamitin sa operations. Kapag negative ang lumabas dito, ibig sabihin, itong current liabilities mo, malaki. Hindi enough ang current assets para ma-cover ang current liabilities. So, pinapakita lang ito na yung more information about the liquidity of the firm. So, current ratio with asset ratio and additional note lang kay net working capital. Now, pumunta naman tayo kay activity ratio. Now, ito bang sa activity ratio class, it measures the speed with which various accounts are converted into sales or cash, inflow man or outflow. So, pinapakita lang nito na ginagamit mo ang assets or ang various accounts ng iyong company. Now, in using those assets, in using those various accounts, gaano ka kabilis mag-produce ng sales or cash? Whether yung cash naman is outflow or inflow. Like, kay accounts receivable, kasi may marireceive ka, or kay accounts payable, kasi may babayaran ka. Now, in a sense daw, class, activity ratios measures how efficiently a firm operates along a variety of dimensions such as inventory management, yung disbursements mo, yung collection mo. So, pinapakita lang ito na yung efficiency ng operations ng firm. Yun yung halaga ni activity ratio. Now, ito yung mga basic activity ratios: trade, receivable turnover, average collection period, inventory turnover, days supply in inventory, payable turnover, average payment period, and total assets turnover. So, i-discuss natin yan sila. Now, si accounts or trade receivable turnover, ang sa kanya daw, class, it measures the firm's velocity of collection of trade accounts. This tests the company's efficiency in collection of accounts. So, ano ang point niya? Well, itong si AR turnover ratio, basically it measures the number of times over a given period that a company collects its average accounts receivable. So, pinapakita lang ito na how many times does a company collects its accounts receivable. Gaano siya kadami o kabilis mag-collect ng accounts receivable. Kapag, or before that, ang formula niya is accounts receivable turnover equals to net credit sales. Tandaan, credit sales kasi accounts receivable lang titingnan natin dito. So, exclude nyo ang cash divided by the average accounts receivable. Now, dito mas kapag or the higher the AR turnover, the better. Kasi pinapakita nito na mabilisan yung pag-collect ng company ng accounts receivable. Mabilis siyang mag-collect at maraming beses siyang mag-collect. Ibig sabihin, maganda yung collection operations ng company. Kapag mataas yung accounts receivable turnover, parati niyang kino-collect yung payment. And kapag parati niyang kino-collect ang payment, ibig sabihin, marami siyang or nako-convert agad into cash yung sales na nagawa ng company. Now, in connection with this AR turnover, pupunta tayo kay average collection period. So, ano itong si average collection period? Ito daw si ACP, also known as average age of accounts receivable, is useful in evaluating credit and collection policies. So, anong point niya? The average collection period represents the average number of days between the date of credit sale is made and the date of purchaser pays for that sale. So, ang relationship ni AR turnover kay average collection period, kay AR turnover, pinapakita nito na how many times na sa company collects its accounts receivable within a given period of time. Now, pagdating kay average collection period, you translate that into days. Pinapakita nito na how many days does the company collects the, or how many days before the company collects the accounts receivable from the date of sale. Nakalagay dito, between the date of credit sale is made and the date the purchaser pays for that sale. So, pinapakita kaya, ulitin ko lang, pinapakita kaya accounts receivable turnover yung velocity or gaano kadaming beses kinukolect ng company within the given period yung accounts receivable nila. And with that, you will translate that into days. Kung saan, ipapakita mo na gaano katagal in terms of days bago makolekt ng company yung accounts receivable. Basically, the difference or the number of days between the date of credit sale is made and the date of purchasing when the purchaser pays for that sale. So, anong formula nito? Average collection period is equals to 360 days divided by the AR turnover. So, gaya na sabi ko, pinatranslate mo na si AR turnover into days para mas magkaroon ka ng proper picture sa collection policy o sa collection operations ng company. Another formula niyan, class, is average collection period is equals to accounts receivable divided by average sales per day, which is net sales divided by 360 days. So note, the average collection period is meaningful only in relation to the firm's credit term. Credit term, meaning, ano yung policy ng company sa pagbayad ng accounts receivable. Yan si credit term. So, paano siya nagiging meaningful? Well, let's say yung average collection period ng company is 30 days. Yan, tandaan nyo, ang ACP is 30 days. 30 days from the date of sale bago niya makuha yung bayad from that account receivable. It will take 30 days bago niya makuha yung bayad. That's the average. Now, in relation to that, first scenario, if the customer credit term is 50 days, ibig sabihin, from the date of sale, ang customer merong 50 days para bayaran yung accounts receivable. So, ano meaning nito? In relation to that 30 days, it means poorly managed yung credit or collection department. Kasi kung makikita nyo, dapat within 30 days, bayad na yung accounts receivable. Pero in this situation, it will take 50 days bago mabayaran yung accounts receivable. Ibig sabihin, mas natagalan sa collection yung company. And it means pangit yan. Pangit yung pag-manage sa credit or collection department. Now, second scenario, if customer credit term is around 29 days, management of that credit or collection department is quite acceptable. Bakit? Kasi yung average dapat is within 30 days, dapat bayad na yung accounts receivable. Pagdating dito sa second scenario, 29 days pa lang, bayad na siya. Na-collect na yung accounts receivable. Ibig sabihin, properly manage yung credit collection department. So, additional note. Always bang maganda tingnan yung average collection period kapag mababa or the lower the better. Always bang magandang tingnan na mababa yung average collection period? Hindi. Bakit? Or let's say sa perspective ng investors or creditors, maganda siya tingnan kasi ibig sabihin, it shows na properly manage yung credit or collection period or department ng company, mabilis siyang mag-convert ng sales into cash. Pero sa perspective ng isang customer, pangit yan. Bakit? Ibig sabihin, hindi flexible ang company sa credit term nito. Kapag ang company hindi flexible sa credit term nito, ang mga customer, madi-discourage yan silang bumili ng product from that company because hindi sila flexible sa credit term nito. So, knowing that, kailangan magkaroon ng proper balance yung credit or collection department ng company para hindi ma-discourage ang mga customer na bumibili ng product and hindi rin ma-discourage yung mga investors or creditors na nagbibigay ng capital to that company. So, dapat ang credit or collection department properly balanced. So, gets nyo na. Pumunta naman tayo kay inventory turnover. Now, ano ba itong si inventory turnover? Ito si inventory turnover, it commonly measures the activity or liquidity of a firm's inventory. So, ang mini-measure nito is gaano ka-liquid yung inventory ng firm. Gaano kabilis siyang mabenta. Ang formula niya is inventory turnover equals to cost of goods sold divided by the average inventory. So, tandaan, ang mini-measure nito is gaano ka-liquid, gaano kabilis mabenta yung inventory ng isang company. Now, take note, the resulting turnover is meaningful only when it is compared with that of other firms in the same industry or to the firm's past inventory turnover. So, doon lang siya nagkakaroon ng halaga kapag nako-compare siya. Like, for example, naaayon ba sa benchmark o sa industry standard yung inventory turnover ng isang merchandising company? Mabilis niya bang nagbebenta yung kanyang product in relation to the inventory standard? So, doon lang nagkakaroon ng halaga inventory turnover kapag kino-compare siya. Now, gaya sa relation ng AR turnover and average collection period, same din ang relation ng inventory turnover kay days supply in inventory, or also known as average age of inventory, because it measures the average number of days to sell or consume the average inventory. So basically, same kay AR turnover and ACP, etong si inventory turnover, i-translate mo na siya into days. I repeat, etong si inventory turnover, i-translate mo na siya into days. Bakit? Para mas magkaroon ka ng proper perspective or proper view in regards to the liquidity of the inventory. So, ang formula niya is days supply in inventory equals to 360 days divided by inventory turnover. Now, naalala ko lang, usually kasi 360 days ang ginagamit ng mga bank. So, kaya, mostly nang inaano natin is 360 days. Kapag silent ang problem, and sinabi na 1 year, automatically assume nyo is 360 days. So, gamitin nyo lang ang 365 days kapag stated sa problem. Pero kapag silent ang problem, 360 days ang gagamitin nyo. So, additional side note lang. So, ito yung formula ng day supply and inventory. So, note lang, this value can be used as the average number of days placed in inventory. Meaning, for example, 30 days ang nakalagay dito. So, 30 days ang nakalagay dito. So, from the date of purchase, or from the date that inventory has become a finished goods inventory, it will take 30 days bago mabenta yung inventory na yan. So, I repeat, kapag 30 days ang answer kay day supply in inventory, ang minimin lang yan, na from the date that inventory was acquired or was produced, it will take 30 days bago mabenta yung inventory na yan. Yan yung minimin ng days supply in inventory. So, guess nyo na, inventory turnover, gaano kabilis or gaano ka-liquid ang inventory ng firm, gaano kabilis mabenta yung inventory. Ang day supply inventory naman is you're translating inventory turnover into days para mas magkaroon ng proper perspective. Ang proper perspective in terms of the liquidity of the inventory. Gaano kabilis in terms of days mabenta yung inventory. So, yan. Punta naman tayo kay accounts payable turnover. Now, itong si AP turnover, it measures the firm's efficiency in meeting its accounts payable. So, gaano ka-efficient si company bayaran yung mga short-term utang niya. Yung formula ni accounts payable turnover is net purchases divided by average accounts payable. So, kung makikita natin, same lang, closely related sila ng concept kay AR turnover, pati kay inventory turnover. So, mini-measure ni AP turnover, efficiency of the company or of the firm in meeting its accounts payable. Now, take note, it's a liquidity ratio that measures the average number of times a company pays its creditor over an accounting period. The ratio is a measure of short-term liquidity with a higher payable turnover ratio being more favorable. So, mas nagkaroon tayo ng idea ano ang labot or anong importance ni AP turnover. It gives us an idea kung gaano karaming beses magbayad si company ng mga accounts payable niya within a given payable, within a given period. Kapag mas mataas or the higher the accounts payable turnover is, mas favorable siya. Ibig sabihin, mabilis magbayad ng utang ang company. And maganda itong ratio na to sa mata ng mga creditor. Kasi ang mga creditor, tinitingnan kung proper ba yung credit payment or credit liability payment ng company. Mabilis ba itong magbayad ng utang itong company nito? Kapag maganda yung accounts payable turnover ng isang company, mas maiengganyo ang isang creditor na magpautang, mag-finance sa company na yan. Kaya mahalaga si accounts payable turnover. Now, kaya kina inventory and accounts receivable, itong si accounts payable turnover, ita-translate natin into days, which is known as the average payment period or the average age of accounts payable. It is calculated in the same manner as the average collection period. So itong formula, ATP is equals to 360 days divided by AP turnover, or APP is equals to accounts payable divided by average purchases per day, which is the annual net purchase divided by 360. So makikita natin, itong si accounts payable turnover, it gives you the efficiency of the firm in paying its short-term liabilities, which is the accounts payable. Which meaning, it gives you the idea how many times does the company pay its accounts payable, which is a good looking, which is a good measurement for creditors in making their decision to finance or lend money to the firm. Kapag maganda ang accounts payable turnover, mas naengganyo ang creditor na magbayad or mag-finance ng pera sa company. Now, itong AP turnover, ita-translate natin kay average payment period into days. Ita-translate natin into days. So note, this figure is meaningful only in relation to the average credit term extended to the firm. Paano? Same halos ang logic sa average collection period. Ito, payment lang. Let's say, para mas mag-gets natin, ang average payment period is 30 days. So, meaning yan, from the date the accounts payable was incurred, it will take 30 days for the company to pay that accounts payable. I repeat, let's say ang APP is 30 days. Meaning, from the date the accounts payable was incurred, it will take 30 days for the company to pay that accounts payable. So, the first scenario natin, if supplier credit term is 50 days, it means a good credit rating. Maayos mong bayad ng utang. Paano? Binigyan ka ng supplier ng 50 days para magbayad ng utang. Pero, 30 days pa lang, binayaran mo na. Binayaran mo agad. Na magandang yan. Magandang view yan sa mata ng mga creditor. Kasi, ibig sabihin, mabilis kang magbayad ng utang. Now, sa second scenario natin, if supplier credit term is around 20 days, tapos, ang binigay sa yung time para magbayad ng utang is 20 days. Pero, binayaran mo siya on the 30th day. Ibig sabihin, lumampas ka ng 10 days. Ibig sabihin, mababa ang credit term mo, matagal ka bago magbayad ng utang. Kasi, 20 days nang binigay sa'yo, pero 30 days bago ka nakabayad. Pangit yan sa mata ng mga creditor. Ibig sabihin, matagal ka bago magbayad ng utang. So, yun yung halaga ni average payment period. Now, total asset turnover naman tayo. Total asset turnover indicates the efficiency with which the firm uses its assets to generate sales. So, ang pinapakita lang nito, gaano kagaling ang company sa pag-utilize, sa paggamit ng assets nito, kung saan yung pag-utilize at paggamit ng assets nito is used to generate sales. Yun yung pinapertain ni total asset turnover. So, ang formula niya, total asset turnover equals to net sales over average total asset. Now, take note, generally, the higher the firm's total asset turnover, the more efficiently its assets have been used para to produce the sales. This measure is probably of greatest interest to management because it indicates whether the firm's operations have been financially efficient. Now, take note kung titingnan natin dito. The more na mas mataas yung net sales, the more na mas mataas ang total asset turnover. The more na mas mataas yung net sales, as compared to average total asset, pinapakita nito na magaling, efficient ang firm sa paggamit ng sa pag-utilize ng mga assets nito to produce the sales. Maayos. Lalo na kapag mas mataas yung net sales habang tumataas ito. So, yun ang pinapertain ni total asset turnover. Now, pupunta tayo sa opposite ni total asset turnover, which is the capital intensity ratio. Now, itong si capital intensity ratio, it measures the intensity of a firm in applying its assets to generate sales. So, parang katunog ni total asset turnover. Pero kay capital intensity ratio, it determines the degree of its application of assets to sales. So, ito ang formula niya. CIR is equals to average total asset equals divided by net sales, which is opposite lang yung total asset turnover. Now, itong kaya capital intensity ratio, ang pinapakita lang niya is that it measures of the amount of capital needed per dollar revenue. Let's say, ang answer dito is 2. Kasi ang capital intensity ratio is 2. Meaning, it will take 2 pesos to produce 1 peso of net sales. Tandaan nyo, kapag ang answer dito is 2, meaning lang yan, the company needs 2 pesos to produce 1 peso of net sales. Kasi nakalagay dito, it measures the amount of capital needed per dollar revenue. Let's say 2 ang answer. It will take $2 to produce $1 of net sales. So, the lower this capital intensity ratio, kasi mas efficient ka sa paggamit ng assets ng company to produce that $1 of net sales. The lower, the better. Kay total asset turnover, the higher the better. Kay capital intensity ratio, the lower, the better. Now, punta naman tayo kay debt management ratio. So, itong debt management ratio, it measures how risky the firm is and how much of its operating income must be paid to creditors than to shareholders. So, as makikita natin dito, how risky the firm is. Ang meaning ng risk na yan is yung capability ng firm para bayaran yung utang nito, yung debt nito. Kapag may capability yung firm na magbayad ng utang, less risky siya. Pero pag nakita mo na halos walang capability or mababa yung capability ng firm to pay its debt, mataas yung risk nito. And pinapakita rin ng debt management ratio, out of that operating income ng company, how much yung babayaran mo sa creditors as opposed to shareholders. Kasi, as you know, ang priority ng pagbayad is to the creditors. Sila yung priority na kailangan mong bayaran. Kapag nabayaran mo na sila, doon mo palang bibigyan ng dividend or ng kita yung mga shareholders. Ganun. I repeat, sa priority of payment, creditors yung pinaka-priority. Sila yung kailangan mo ng bayaran. Kapag nasatisfy mo na si creditor, saka mo palang bibigyan ng share ang mga shareholders. So, pinapakita ng debt management ratio, how much of that operating income yung kailangan mo munang bayaran kay creditor bago mo mabigyan ng share si shareholder. Pinapakita rin ng debt management ratio, how risky the company is when it comes to paying its debt. So, lagyan na natin yan. Punta tayo sa basic debt o management ratios, the debt, time interest earned, at fixed payment coverage. Now, ano itong si debt ratio? Well, si debt ratio daw class measures the proportion of total assets financed by the company or by the firm's creditors. Na kung saan, the higher this ratio, the greater the amount of other people's money being used to generate profit. Now, kasi class, ang capital structure ng company, or first, di ba, ang asset is made up of liability plus equity. Now, itong si liability and equity, they are considered as capital structure. Sila yung nagbibigay ng capital sa company. Now, itong si debt ratio, pinapakita nito na out of the total capital ng company, which is also known as the total assets, ilan dyan, o ilang percentage dyan, is made up of liabilities. Itong si debt ratio, pinapakita niya na out of the total capital structure of the company, which is also known as the total assets, ilang percentage dyan is made up of liabilities. Yun yung pinapakita ni debt management or ni debt ratio. Now take note, the higher this ratio, the greater the firm's degree of indebtedness, and the more financial leverage it is. Ibig sabihin, mas marami yung utang ng company as compared sa ownership ng shareholders. Kapag ganun nangyari, ibig sabihin, mas malaki yung component ng utang sa capital structure as opposed sa investment ng mga shareholders. Yun yung pinapertain ng debt ratio. Now, ano ba itong financial leverage? Parating itong ilang beses itong makikita sa financial management. Now, para matandaan natin, itong si financial leverage is basically the use of debt to buy more assets. The higher it is, risk of failure increases due to more difficulty in paying the debt. So, itong si financial leverage, aminin lang nito is yung capital structure ng company, yung component nun, mas malaki yung component nun. I repeat, di ba yung capital structure ng company is made up of debts, the liabilities, and owner's equity, or the shareholders' equity. Na, itong financial leverage, ang pinipertain nito is yung yung mga debts mo, or mas marami kang debts, paano ba ito? Mas marami, pinipertain nito na yung mga assets mo, it is financed by debts. Kapag malaki yung financial leverage mo, ibig sabihin, yung mga assets mo that is financed by debt, mas lumalaki rin. Mas dumadami yung mga assets na that is financed by debts that is financed by utang. Kapag ganun nangyayari, mas tumataas yung risk of failure mo. Kasi kapag hindi mo nabayaran yung mga utang na yun, wala ka. GG ka. Kasi yung assets mo, yun yung kukunin. Kasi yung mga assets na yun was financed by debt. Parang naging collateral ba? So, delikado yung financial leverage. Kailangan yan may proper management. Now, punta tayo kay time interest earned ratio, sometimes called the interest coverage ratio. It measures the firm's ability to make contractual interest payments. So, pinapakita nito yung capability ng firm para bayaran yung mga utang nito o yung mga interest ito sa mga utang. Paano natin yung malalaman? Well, ito yung formula. Time interest earned ratio is operating income divided by interest expense. Now, itong operating income is the earnings before interest and income tax. Yan si operating income. Tandaan niyo yan. So, take note, the higher its value, the better able the firm is to fulfill its interest obligation. So, kung makikita natin, kapag mas mataas yung value nito, ibig sabihin, either mas mataas yung operating income or mas mababa yung interest expense, ibig sabihin, the higher the value ng time interest earned ratio, the higher the capability of the operating income to cover the payment of interest expense. Ulitin ko, the higher the value of the time interest earned ratio, the higher the marginal of safety, or the higher the capability of the operating income to cover the payment of interest expense. So, maganda yun. Ibig sabihin, mas marami kang margin of safety, mas malaki yung margin of safety mo to pay the interest expense. Now, sa industry standard class, a value of at least 3.0 and preferably closer to 5.0 is often suggested. So, ito yung industry standard or yung suggested value ni time interest earned ratio para ma-cover yung interest expense. Now, punta tayo kay fixed payment coverage ratio, which same lang kay time interest earned ratio, kaso may konting difference na. It measures the firm's ability to meet all fixed payment obligations, such as loan interest and cap and principal, lease payment, and preferred stock dividends. So, this simply expands the coverage of time interest earned ratio by including other fixed payments. So, meaning, kung kay time interest earned ratio, interest expense lang ang inano niya, kay fixed payment coverage ratio, mas dinamihan niya pa yung coverage, which is makikita natin dito sa formula. Fixed payment coverage ratio is equals to operating income plus lease payments divided by fixed charges. Ito si fixed charges, makikita natin, is composed of interest, lease payments, and other fixed charges. So, it expands more. Yun yung importance ni fixed payment coverage ratio. Now, take note, like the times interest earned ratio, the fixed payment coverage ratio measures risk. The lower the ratio, the greater the risk to both lenders and owners, and the greater the ratio, the lower the risk. Bakit? Kapag mas mataas si fixed payment coverage ratio, ibig sabihin, mas may margin of safety ka, mas may capability ka to cover the payment of the fixed charges. Kasi nga, mas mataas yung fixed payment coverage ratio. Kapag mababa naman to, mas mababa yung capability mo, mababa rin yung capability mo to cover the payment of fixed charges. Kapag ganun nangyari, mataas yung risk of failure of the company. Mataas yung risk na hindi mabayaran ng company yung mga liabilities nito. So, the higher the fixed payment coverage ratio, the better. Now, punta naman tayo kay profitability ratio. Now, ito si profitability ratio naman yan. It shows how profitable the company is in its operation and usage of resources. So, from the time it's at profitability, gaano kagaling si company kapag gamit ng resources nito para mag-earn ng profit sa operations nito. Ay, gaano kagaling si company kapag gamit ng resources nito, kapag utilize ng resources nito para mag-earn ng profit in its operation. Yun yung mini-measure ni profitability ratio. Now, there are many measures of profitability. Siyempre, as a group, these measures enable analysts to evaluate the firm's profit with respect to a given level of sales, certain level of assets, or the owner's investment. So, ano mga basic profitability ratios? Gross profit, operating profit, net profit, earnings per share, return on assets, and lastly, return on equity. So, punta tayo kay gross profit margin. Now, ito sa gross profit margin measures the percentage of each sales dollars remaining after the firm has paid for its goods. So, as we know, gross profit is sales minus cost of goods sold equals si gross profit. So, ang pinapagay ng gross profit is after mo mabayaran yung cost of goods sold, gaano na lang karami yung natira from that net sales. Kapag mas mataas yung gross profit margin, ibig sabihin, mas mababa lang yung binayaran mo for the cost of goods sold. Kapag gano'n nangyari, ibig sabihin, mas mataas yung gross profit mo. Nakalagay nga dito the higher the gross profit margin, the better. Bakit? That is, the lower the relative cost of merchandise sold. Ibig sabihin, mas marami pang natira para sa distribution of income sa company. Dahil, mas mataas yung gross profit mo or yung gross profit margin mo. Kapag mas mataas, tandaan yan, mas maganda. Now, mas naging narrow ito pagdating kay operating profit margin. Bakit? Ito operating profit margin measures the percentage of each dollar remaining after all costs and expenses other than interest, taxes, and preferred stock dividends are deducted. Kung makikita natin yung gross profit, net sales minus cost of goods sold lang. Diretso ka na sa kanyang gross profit. Which, pagdating kay operating margin, mas nag-narrow down ka kasi binawasan mo na ng all cost and expenses, except interest tax and deferred tax dividends, para marating mo si operating profit. Now, because of that, ito yung formula. Or in connection with that, ito yung formula. Operating profit margin equals operating profit divided by net sales. Now, take note again, it represents the pure profits earned on each sales dollar. Operating profits are pure. Bakit? Because they measure only the profits earned on operations and ignore interest, taxes, and preferred stock dividends. An operating margin is preferred. Kasi kung makikita natin dito, gaya na nakalagay sa pangalan niya, operating profit. Ibig sabihin, minimeasure mo lang yung profit na naging result of your operations. Kasi, itong operations ng company, yan yung kontrolado mo. Yan yung kontrolado mo. So, itong si operating profit, pinapakita niya na gaano kagaling, gaano ka-efficient, gaano ka-effective yung pag-control mo sa operations ng company para makapag-produce ng operating profit. Now, kapag itong si operating profit is mataas or the higher, it is better kasi mas efficient ka sa operations ng company mo, and with that efficiency in operations, you produce more of the operating profit. And the higher the ratio, as compared to the net sales, the better. So, the higher, the better. Tandaan nyo yan, okay? Operating profit margin. Now, gross profit, operating profit, mas naging narrowed down ito kay net profit margin. Kasi, pagdating kay net profit margin, it measures the percentage of its sales dollars remaining after all costs and expenses, including interest, taxes, and preferred stock dividends has divided. Pagkita natin dito, kay operating profit, excluded si interest, taxes, and preferred stock dividends. Pagdating kay net profit, binawasan na din siya. So, anong formula? Net profit margin equals to net profit divided by net sales. So, take note, the higher the firm's net profit margin, the better. The net profit margin is commonly cited measure of the firm's success with respect to earnings and sales. Bakit? Kasi itong si net profit, ito yung end game. Ito yung end result. Na kung mataas itong si net profit, ibig sabihin, mas maganda. Kasi, overall, maganda yung performance ng company. Kasi, itong si net profit, ito yung gagamitin mo for additional investment or ito na yung ibibigay mo sa mga ordinary stockholders as the dividend. So, maganda kapag mas mataas kapag mataas ang net profit. So, kaya nakalagay dito, the higher the firm's net profit margin, the better. Kasi itong si net profit, dyan mo kukunin or mapagkukunan mo yan ng mga additional investment, mapagkukunan mo yan ng distribution of dividends to ordinary stockholders, kasi dito, preferred eh. So, for ordinary stockholders, so that higher the net profit margin, the better. Kasi it measures the firm's success. Now, punta tayo kay earnings per share, which measures the peso return on each ordinary share. So, wag nyo to, don't confuse it with dividends per share. So, iba si earnings per share kay dividends per share. Tandaan nyo yan. Bakit? Kasi itong sa earnings per share, it measures the peso return on each ordinary share. Paano? Ito yung formula niya. Net income after preference dividend requirement divided by the number of ordinary share outstanding. Kung makikita natin dito, yung net income mo, after mo mabayaran yung preference dividend, yun ang i-divide mo kay number of ordinary shares outstanding. Meaning, number of ordinary shares that is owned by the shareholders. Ang pinapakita nito is, for example, nag-invest ang shareholders ng $1, ilan yung magiging return nila? Ito yung magkano yung magiging return out of that $1 investment. Yun yung pinapertaining earnings per share. Now, pagdating kay dividends per share, ang pinapertaining nun is magkano yung actual na na-receive ng ordinary shareholder. So, tandaan nyo, kay earnings per share, pinapakita nito is magkano yung income ng shareholder for each, ng isang ordinary shareholder for each $1 investment. Magkano yung income. Pagdating kay dividends per share, magkano yung actual na na-receive ng ordinary shareholder per share. Tandaan nyo yun. Now, punta tayo kay return on total assets or si ROA. It's often called the return on investment, for which it measures the overall effectiveness of management in generating profits with its available assets. So, pinapakita nito is gaano ka-effective, gaano kagaling si management sa paggamit, sa pag-utilize ng available assets ito in its operation para makapag-generate ng profits. Yun yung pinapertain ni return on total assets or also known as return on investment. Paano natin yung malalaman? Ito yung formula. Return on total assets is equals to net income divided by the average total asset, or also known as, other formula is return on total assets equals to asset turnover divided by the net profit margin. So, the higher the firm's return on total assets, the better. Bakit? Ibig sabihin, mas effective, mas magaling, mas efficient ang company sa pag-utilize ng mga assets nito in its operation to generate profit. Ibig sabihin, proper yung management ng company when it comes to its operation. Now, ano naman si return on equity or si ROE? Well, it measures the return earned on the shareholders' investment in the firm. Meaning, ang inaano nito is nag-invest ang shareholder. Ano yung expected return ng shareholder na yun sa in-invest sa firm? Yun yung return on equity. Anong formula niya? Return on equity is equals to net income divided by the ordinary or the average ordinary equity, or other formula is return on equity divided by ROA times financial leverage multiplier, which is this. Financial leverage multiplier is equals to total assets divided by the ordinary share equity. So, generally, the owners are better off the higher is this return. Kasi, ibig sabihin, titingnan ng shareholders na gaano ka laki yung magiging return sa investment ito. Gaano kalaki yung kikitain niya from his investment. Yun yung labot o yun yung value ni return on equity. So, natapos tayo kay profitability ratio, punta naman tayo kay market ratio. Now, ito sa market ratio, it relates to the firm's market value as measured by its current share price to certain accounting values. Now, these ratios give insights into how investors in the marketplace feel the firm is doing in terms of its risk and return, na kung saan they tend to reflect on a relative basis the common stockholders' assessment of all the aspects of the firm's past and expected future performance. So, mahaba. Ano bang pinapertain ito? O anong meaning nito? Basically, itong si market ratio, the market has a view or a perspective about the firm. And in relation to that view or perspective of the firm, i-measure mo in comparison to the values or data sa financial statements mo. And with that, magkakaroon ka ng proper assessment or proper reflection sa kung ano yung tingin ng market sa company mo. So, I repeat, itong si market ratio, ang minimin niya lang is ina-analyze siya in terms of numbers. Ano yung tingin ng company o anong tingin ng market sa company. Kaya makikita natin dito sa basic market ratios, price earnings, market book, and dividend yield. So, I repeat, the market ratios, ina-analyze na to by using the ratios kung ano yung tingin ng market sa company. Now, kung tayo kay price earnings or PE ratio, is commonly used to assess the owner's appraisal of share value. The PE ratio measures the amount the investors are willing to pay for each dollar of a firm's earnings. So, kung makita natin dito, itong mga investors na to, for each dollar na na-earn ng company, magkano sila willing i-invest sa firm na ito? Magkano sila willing ibigay sa firm na ito for each dollar that the firm is earning? Yun yung pinapertain ni price over earning ratio. Isang formula niya is the market price per share over or divided by the earnings per share. As we know, the market price per share is the reflection of what the market thinks of the company. So, kung makita natin dito, or what the market thinks about the company, meaning, ito yung amount or peso value na kung saan willing mag-invest yung mga investors, willing bayaran ng mga investors. Ito si market price per share, na kung saan i-compare mo sa kay earnings per share. So, the level of this ratio indicates the degree of confidence that investors have in the firm's future performance. The higher the PE ratio, the greater the investors' confidence. Bakit? Kasi willingness ang tinitingnan dito. Willingness. Magkano o gaano kalaki ang willing isugal ang investor para kumita lang ng $1, ng $1 sa earnings ng company. Let's say, price earnings per ratio is 2. Meaning, the investor is willing to pay $2 para mag-earn lang ng $1 sa earnings ng company. Think ko, itong si price earnings per ratio, it indicates the degree of confidence the investor has over the future performance of the company. Medyo sinisinok ako. So, punta naman tayo kay market or book value ratio, which provides an assessment of how investors view the firm's performance. Ito naman, parang same lang kaya, no? Kay price earnings per ratio. Pero ito, yung performance ng company sa pag-earn ng profits o sa pag-earnings nito, kay kay market or book value. It relates to the performance of the company in relation to the book value of the company. Ulitin ko lang, itong si price earnings per ratio, it pertains to the performance of the company in earning, in being profitable. Pagdating naman kay market or book value ratio or book ratio, yung performance lang ng company ang nire-reflect ito, ang ina-assess dito. Hindi yung earnings, yung performance lang. So, anong formula niya? Market or book ratio is equals to market price per share. As you know, market price per share is the amount that the investors are willing to invest in the company per share divided by the book value per share of the company. So take note, the stocks of firms that are expected to perform well, meaning improve profits, increase their market share, or launch successful products, typically sell at higher NB ratio than the stocks of firms with less attractive looks. Simply stated, or in simple terms, firms expected to earn higher returns relative to their risk typically sell at higher market book multiples. Ibig sabihin, the higher, the better. Kasi, yung confidence o yung view o yung reflection ng investors sa performance ng company is maganda. Yung isipin nila, itong company na to, maganda ang performance nito, magiging magandang performance nito, magiging maganda yung operations nito. So, paano yun nare-reflect? Pag mataas yung market or book ratio. So, market or book ratio, the higher, the better. Why? Because it shows the confidence of the investors over the performance of the company. That the company will perform good or better. And punta naman tayo kay dividend yield ratio, which shows the rate earned by shareholders from dividends relative to parent price per stock. So, Ang formula niya is dividend yield ratio is equals to dividends per share divided by market value per share. The higher the better. So, the market value per share is the amount that the investors are willing to invest into the company per share. Meaning, ito yung reflection, ito yung view, ito yung tingin ng investor sa company. And as we know, dividends per share, ito yung nadidistribute sa mga investors, which are the shareholders. Na kapag ito mas mataas, the better. Ibig sabihin, may confidence ang mga investors sa company. Yung willingness nilang mag-invest sa company para ma-earn lang yung dividends na marireceive nila. I repeat, it shows, gaya na sa iba, it shows the confidence the investors have over the company because it shows gaano kalaki yung gusto nilang i-invest o bayaran para mag-earn lang o para makareceive lang ng dividends ng company. So, the higher, the better. Because these three, itong tatlong to, the price earnings, the market book, at the dividend yield, it shows the confidence. It shows ano yung tingin ng mga investors sa company. Yun yung halaga ng market ratio. So, I hope nag-gets nyo. Punta naman tayo kay other financial ratio. So, punta dito sa other financial ratio, mga additional notes lang to sila or additional ratios na makakatulong sa pag-understand ng financial statement ng company which in relation to its operation. So, una, punta tayo kay plant asset turnover. So, ano to siya? Ito to si plant asset turnover. It tests roughly the efficiency of management in keeping plant assets or plant properties employed. So, anong minimin nito? Ibig sabihin, pinapakita nito is gaano ka-efficient ang company sa paggamit ng plant properties nito sa operations ng company. Gaano ka-efficient ang company sa paggamit ng plant properties sa operations nito. Paano nalalaman? Nandito ang formula. Plant asset turnover is equals to net sales divided by the average fixed asset. Net, meaning, binawasan mo na ang accumulated depreciation. Kaya sa net, the higher, the better. Because the higher, meaning, mas efficient ang company sa paggamit ng plant properties nito. So, makikita natin dito, para siyang narrowed down o para siyang specific component ng total asset turnover. Dito lang kay plant asset turnover, ang pinapertain na natin o ang tinitingnan natin is yung paggamit ng plant properties. As compared kay total asset na kung saan tinitingnan natin isang paggamit ng overall asset. Kay plant asset, in particular or specific lang natin tinitingnan ng efficiency ng paggamit ng plant properties ng company to produce or to generate profit, to generate sales. So, the higher, the better. Kay equity ratio naman tayo, measures the proportion of assets provided by owners. Meaning, as we know, the accounting formula is asset is equals to liability plus equity. And we know, yung equity and liability is a component of asset. Liability and equity is also known as the capital structure of a company. So, equity ratio, tinitingnan yan o pinapakita sa atin ito na out of the total assets of the company, ilan dyan yung financed by the owners, which are the stockholders of the company. Ilan dyan ang nanggaling sa stockholders ng company. Ilan dyan yung pagmamay-ari ng stockholders of the company. Yun yung pinapakita ni equity ratio. Now, take note, the higher, the better. Bakit? A low equity ratio means that the company is primarily used debt to acquire assets, which is widely viewed as an indication of greater financial risk. So, kapag mas mababa daw ang equity ratio, ibig sabihin, yung company daw, yung mga assets ng company is financed by debt, is financed by liabilities. So, medyo risky yun or risky talaga yun siya. Kaya nakalagay dito, greater financial risk. Kasi as we know, equity ratio, as we know, meaning nun, mataas ang debt ratio, mababa ang equity ratio. Kasi as we know, asset is made up of liabilities and equity. So, let's say, ang equity ratio mo is 0.4, ang meaning nun, ang debt ratio mo is 0.6. So, I repeat, kapag ang equity mo is 0.4, ang meaning nun is, ang debt ratio mo is 0.6. So, part na yan sila. Na kapag naman daw yung equity ratio mo is mataas, the higher the value, it generally indicates the company is effectively funded its asset requirement with a minimal amount of debt. Ibig sabihin, yung company mo, it is financed by the investment of shareholders as compared sa it is financed by the liabilities incurred. Kapag gano'n yung nangyari, ibig sabihin, mas mababa yung risk of failure or yung financial risk ng company mo kasi mas malaki yung financed by equity as opposed to financed by debt. So, ito, additional notes lang. 0.50 and below are leveraged companies. Ibig sabihin, mas mataas yung debt ratio nila or mababa yung equity ratio, while 0.50 and above are considered conservative. Ibig sabihin, mas mataas yung equity ratio nila or mababa yung debt ratio nila. So, assessment yan ang tawag dito. O assessment lang yan. Now, debt to equity ratio. Ngayon, ang sino-compare natin is yung liability sa equity. Debt to equity ratio measures debt relative to amount of resources provided by the owners. Ang formula, total liabilities equals to total equity. Now, note, shows the capital structure of the company. A higher debt-equity ratio indicates a levered firm, which is quite preferable. Nga, alam natin, ang levered firm, meaning, much of its assets is financed by debt. Much of its assets is financed by liability, which means that it has a greater risk as compared kung yung asset is financed by equity. Now, this is quite preferable daw for a company to be stable with significant cash flow generation. Meaning, kahit na levered firm siya, kahit na yung assets na is financed by debt, okay lang. Basta yung company, maayos yung stable yung significant cash flow generation niya. Meaning, may capability yung company na bayaran yung liabilities niya. Pero kapag yung company wala siyang capability or hindi siya efficient sa pagbayad ng liabilities niya, it is not preferable. Kasi, the company is in decline. Meaning, wala nang mababa yung capability ng company to pay its liability. So, hindi preferable ang mataas na debt to equity ratio. Conversely, a lower ratio indicates a firm's levered and closer to being fully equity financed. The appropriate debt to equity ratio varies by industry. So kapag mababa daw yung debt to equity ratio, makikita natin na yung capital structure ng company is more leaning to equity. Meaning, it is more financed by equity rather than financed by debt. Now, the appropriate debt to equity ratio varies by industry. So, nakadepende yan sa kung anong industry that the company belongs. And lastly, dividend payout ratio, which shows the percentage of earnings paid to shareholder. Formula, dividend payout ratio equals to dividends per share and earnings per share. So, as you can see, ito na yung sasabi ko. Itong earnings per share, pinapakita nito na ano yung income o yung net income na marireceive ng mga ordinary shareholders. Ano yung ano yung income na na-generate ng ordinary shareholders. While ang dividends per share, ito na yung actual na na-receive ng mga shareholders from that income ng company. So, I repeat, itong si earnings per share, pinapakita nito na ano yung naging end result ng operations ng company na kung saan yung net income nito was divided to the ordinary shareholders. Pagdating naman kay dividend shareholder, ito na yung actual na income o actual shares o actual na income na receive ng mga ordinary shareholders. Now with that, babanggain mo sila. Now the higher, the better. Bakit? Ibig sabihin, yung earnings ng company o yung dividends na na-receive ng ordinary shareholder is malapit or mas malapit sa net income or earnings per share na na-generate ng operations ng company. Ibig sabihin, malapit or close sa actual or close sa income na na-generate ng company, yung marireceive ng shareholders. So, the higher, the better. Napunta naman tayo kay Dupont System of Analysis. No, ito yung medyo tricky pagdating sa financial ratios. Ito si Dupont System of Analysis is used to dissect the firm's financial statement and to assess its financial condition. So, this is a more in-depth study or in-depth analysis of the financial statement. It merges the income statement and balance sheet into summary measure of profitability, the return on assets, and the return on equity. So, gaya sabi ko, mas in-depth si Dupont analysis. Now, the Dupont Formula. The Dupont system first brings together the net profit margin, which measures the firm's profitability on shares, with its total asset turnover, which indicate how efficiently the firm has used its assets to generate sales. So, pinapakita nito or kino-combine nito, kino-consolidate nito yung net profit margin ng company sa total asset turnover nito para makita yung relationship ng operations ng company or a more informed ba. Mas nakikita mo yung a clearer picture, kumbaga. In the Dupont formula, the product of these two ratios results in the return on total assets. At makita natin dito, ROA, ito yung nakita natin kanina, di ba? Net profit margin times the total asset turnover. Now with this, substituting the appropriate formulas into the equation and simplifying results in the formula given earlier, ito, ROA is equals to earnings available for common stockholders or net income, kumbaga, net income after the shares of the preference dividend. After the shares of the preference dividend, yun si earnings available for common stockholders divided by sales, or as you know, net sales, times net sales divided by total assets. So, ito si net profit margin, kung maalala nyo, ito si total asset turnover. So, alam natin sa algebra, kapag same to sila, cancelled out. So, since na-cancelled out natin si net sales, ito na yung magiging ni ROA. Earnings available for stockholders, or also known as the net income after the share of the preference dividend divided by the total asset. Yan na si Dupont formula. Binangga natin ang income statement, which is the net profit margin, sa balance sheet, which is the total asset turnover. So, nakita niyo dito, binangga natin. Yan si Dupont formula. Yan si ROA. Now, may modified naman. May modified Dupont formula, which relates the firm return on total asset to its return on common equity. The latter is calculated by multiplying the return on total assets, which is ROA, by the financial leverage multiplier, which is the ratio of total assets to common stock equity. So, which is the ROE times the ROA times the FLM. So, nakita nito kanina sa profitability ratios natin. So, a more in-depth discussion lang to si Dupont formula or si Dupont system. So, substituting the appropriate formulas into the equation and simplifying results in the formula given earlier. Now, si ROA, alam natin kay ROE ito, ROE ito, hindi ROE, ROE, return on equity ito. Now, as you know, si ROA, earnings available for common stockholders divided by net sales times the net sales divided by common stock equity, which is the FLM. So, as you know, sa algebra, cancel out, ang matitira, si earnings available for common stockholders, or also known as net income after the shares of the preference dividend, divided by the common stock equity. Kung anong answer nito, yun si return on equity. As nakita natin kanina sa profitability ratio. So, gaya sabi ko, more in-depth lang to si Dupont analysis. Now, ano bang sense? Bakit kailangan si Dupont analysis or si Dupont system? Well, the advantage of the Dupont system is that it allows the firm to break its return on equity into profit on sales component, net profit margin, and efficiency of asset use component, which is the total asset turnover, and a use of the financial leverage component, which is the financial leverage multiplier, the total return to owners therefore can be analyzed in this important dimensions. So, ang haba-haba, di ba? Ano meaning yan? Well, in layman's term class, ang minimin lang yung Dupont system, or ang halaga lang yung Dupont system is that it gives you a more simple, yet complex, yet consolidating, a more simple or a simpler, yet complex, complex information in relation to ano yung magiging total return to owners. Kasi kita mo ito, earnings available for common stockholders, divided by the common stock equity, pinapakita lang na to na ikaw, investor ka, ikaw, shareholders ka. Ano yung magiging return sa investment mo? Yun yung labot ni Dupont system. Yun yung importance ni Dupont system. Nakalagay dito, the total return to owners, therefore, can be analyzed in this important dimension. So, using this data, using this analysis, ang halaga lang ni Dupont system is for the owners to know ano yung magiging total return sa investment nila. So, yan si Dupont system, a more in-depth analysis of the financial statement. Now, end na, memorize nyo for the, itong mga ratios na to, memorize nyo for the board exam, pero para sa class natin, sulat nyo na lang sa intake start. So, sorry, medyo rusty yung boses ko, and medyo may ubo. Okay, bye-bye.